No.
After our board meeting, we have just released the results, and quite like the preceding 6 months of this fiscal year, we've had a very satisfactory December quarter. As I'm sure you will observe that there is overall improvement in NIM to a level of 3.5%, driven by consistent growth across practically all our businesses, improving profitability driven by productivity and efficiency gains. And during this period, we have been able to preserve what has been possibly the most important objective for the last few quarters, which is our asset quality. The last quarter was also very demanding in terms of several attendant requirements, and tested in many ways the bank's mettle as a relatively young institution due to the consequences of demonetization. Yes Bank has reaped certain benefits out of this demonetization project and has been able to demonstrate that in increasing and improved CASA outcomes. As I'm sure you noted, our CASA improved in this one quarter alone sequentially by 3% to a level of 33.3% compared to 30.3% end of September this fiscal. During this quarter, we also augmented our capital by raising perpetual bonds for a round amount of 3,000 crores, which has helped our CAPAD considerably, which stands at 16.8% with our core CET1 at a level of now 12.2%. So by and large, improvements in corporate penetration, some consistency in our retail operations. There was some slowdown in consumer and commercial retail. However, we are seeing that traction come back, and even the micro, small, medium enterprises which were affected are showing a good turnaround as well. By far, the most important success of the bank in the last quarter was in our digital offerings, not only new product offerings, but substantial increase in volume and value of transactions. Let me now move on to some of our key data metrics, particularly our profit and loss outcomes. As you can see, in this quarter gone by, our PAT was at 882.6% crores, reflecting an overall improvement of 30.6% over the corresponding period last year. The net interest income for this quarter stood at a level of 1,507 crores, which was an improvement of over 30.3% compared to the same period last year. Non-interest income improved by 33.8% to an overall of 998 crores for quarter 3 fiscal 17. Total net income of the bank stood at 2,506 crores approximately, representing an increase of 31.7% compared to last year. Operating profit of the bank improved by 26.5% year on year. In terms of shareholder returns, this was a good quarter. Our ROA stood at 1.8%, and this is an important number which has been consistently improving over the last few quarters. Our return on equity was at a level of 22.3%, amongst the highest in Indian banking and most definitely including even other private sector banks. On balance sheet outcomes, as you will observe, our total deposits grew by 30.5% to an overall level of 1,32,375 crores as of December 31st, 2016. Total assets stood at 1,94,000 crores, which is about 31.9% higher than December 2015. So we are fairly close to crossing 2 lakh crores in total assets. The CD ratio of the bank was at 88.5% as of December end 16. The key highlight, as I briefly mentioned, was the overall improvement in CASA to a level of 33.3%. As I've shared with most of you earlier, that the bank's target is to get to 40% CASA by March 2020. But basis the momentum, not only in the last quarter, but the momentum we have seen and the acceleration in that as well, is leading us to believe that we should be able to get to 40% CASA much ahead of our original objective of March 2020. So by and large, if you see within CASA, we have seen also the overall composition improve, with the CASA ratio improving from 26.6% to 33.3%, which is an increase of over 6%. And within that, SA deposits have grown to a level of about 29,000 crores, which is an increase of 64.3% compared to last year. And CA has grown by 61.5% to an aggregate of 14,778 crores. On advances, we have had a fairly good quarter, predominantly in our fairly diversified corporate businesses. This quarter, we grew our overall loans by 38.7%, which now stand at 1,17,087 crores. So it's been a good quarter for overall growth. When you look at the composition of the total advances, 68.9% of our total advances are actually comprising of our 8 diversified corporate businesses, and the balance, about 30.1%, is driven by our retail and branch banking businesses, including medium enterprises and micro and small medium enterprises included. The overall sectoral distribution of the bank, driven by our fairly tested and time-proven sectoral and knowledge banking strategy, is fairly diversified with no real heavy-duty concentrations. It's very diversified, and in the press release we shared with you, you will see a fairly large and substantive pie chart which shows how our sector exposure is fairly well distributed and reasonably well insulated. I'll move on to some of the key metrics on asset quality. I'm very, very pleased to share with you that in this quarter, our credit cost was all of 8 basis points. So it's been a very, very good quarter in respect of overall credit costs. If you see the first 9 months, our aggregate credit cost for the first 9 months is at 34 basis points. And you will recall in this very room, I shared with you our projection for credit costs for this fiscal year at 50 to 70 basis points. So for the first 9 months, we are at all of 34 basis points. And if you want to get into a little bit more detail, for the first quarter, June 16, it was 15 basis points. For September, it was 11 basis points. And for December now, it stands at 8 basis points. So the sigma of which is 34 basis points.
All right, Rana Kapoor there talking about Yes Bank's earnings and pretty much saying what the market expects to hear from him in terms of the overall performance. The MSME sector is showing some turnaround that is. They are still seeing slowdown in consumer and commercial real estate, or rather the retail space in Q3. CASA ratios improved after demonetization, and they've seen improvement in corporate and retail lending as well in Q3, targeting a current account savings account ratio of 40%, much ahead of March 2020. Let's quickly get in strategies at 2:55 from our technical guest. Siddharth, I'll start off with you. What is it that you'd recommend?
Well, I'll continue to suggest buying BHEL because that stock is seeing, it saw a breakout yesterday, and if you look at today's price action, it's more or less flat, but then